Welcome to Hargreaves Lansdown's Meet the Manager. I'm Joseph Hill, and today I'm joined by Henry Lowson, Lead Manager of the Royal London UK Smaller Companies Fund, which features on our Wealth Shortlist of funds selected for their performance potential. So Henry, the fund invests in smaller companies listed on the UK stock market, and you assess companies through the lens of the Simba acronym. So tell us more about Simba and what are the characteristics you look for?
Well, Joe, our fundamental philosophy is that earnings drive stock prices. And actually we think that fundamentals, or the key fundamental attributes of companies, drive those earnings. So we look at 5 key fundamentals and we call this approach Simba. And we think that if companies have at least 4 out of 5 of those key fundamental attributes, that they can grow from being small cap companies to being roaring FTSE 100 lions. And those are scalability, innovation, management, barriers to entry, and unique assets. So we think that you need to understand how much capital or cost needs to go in order for a company to be able to grow its earnings. Companies need to have innovative products and services so that they can challenge incumbents and grow their market share through market cycles or economic cycles. They need to have good management teams that are incentivized in the same way as we are as shareholders, but also that are good allocators of capital and can engender a good corporate culture. Next, you need barriers to entry, so to restrict the number of competitors that can perhaps come into that space or that industry, and therefore that company can preserve their premium returns over a longer period of time. And finally, you've got unique assets, and this implies and engenders some inherent value within that company and is probably difficult for another company to replicate.
Investing passively has grown in popularity significantly in recent years, but why is UK smaller companies an area of the market an investor might think about investing actively?
Well, the advantage of passive investing is clearly you can get exposure to a broad asset class or index at a relatively low cost. But active fund managers in small cap can actually generate significant outperformance over and above that index outperformance. And the reason is because this asset class is full of inefficiencies. Some of that relates to the lack of analyst research, and some of it to the size of these companies and the liquidity. But the other advantage of an active approach is that you can risk manage your portfolio. And by that I mean you can avoid certain types of stocks, whether they be loss-making stocks or companies in particular sectors, such as commodities.
And in recent years, we've seen lots of takeover activity among small and medium-sized companies and a slowdown in IPOs as well. So how has that changed the opportunity set for you?
Well, I think small and mid-cap investing has always been a very popular and active area for merger and acquisition activity. It's a good way for larger companies to buy bite-sized morsels and accrete their earnings that way. It's also a good source of returns for investors. But I think it's been particularly prevalent over the last few years because valuations are so depressed in this area of the market. And actually UK equity outflows, where we've seen nearly 42 months of outflows, means that there are a number of willing sellers out there. In terms of valuations and premiums, we're typically seeing 30 to 50% premiums when there is a takeover bid. And these purchases are coming not only domestically, but also internationally from private equity and indeed from trade. In terms of IPOs, there has been significantly fewer IPOs than perhaps in 2021 when we saw over 100 in that year. The reason is because there is a big dichotomy really between public markets valuations that are very depressed and private market valuations, which are arguably quite extended. And there is a depth of capital chasing those private market returns.
And in the UK, we've started to see interest rates come down. Now, there's lots of debate about how quickly they might fall from here, but assuming the direction of travel is downwards, could that be a tailwind for UK smaller companies?
So one of the biggest headwinds to growth investors, Joe, has indeed been that surge in interest rates. Not only does it mean that the cost of funding for companies goes up, but investors actually use that interest rate to discount future earnings back to the present. So higher interest rate means a lower net present valuation. So if interest rates now are coming down, that should be a tailwind, I think, for growth investors.
And reflecting on your career so far, what top investment tip have you learnt along the way that perhaps you wish you'd known at the start?
Well, I think the top investment tip has to be to invest in quality. Quality and growth really matter, particularly when you're holding stocks over the long term, because ultimately the stock performance or the return that you can receive will be related to the ability of that company to be able to compound its earnings and its returns over the long term.
And who would you say has had the biggest influence on your investment approach?
It's very difficult to distill it down to one person, but certainly there are a few people who've had a big impact on my investment process and career. The first is Peter Lynch, the Fidelity Fund Manager, who had a very successful career and long-term career investing pragmatically and picking stocks. The second is Howard Marks, who spoke at length about the importance of risk management as really being a foundation for long-term returns. In other words, losing the least when you get it wrong. And I think the third has to be Will Thorndike in his book Outsiders, where he talks about the importance of managers as allocators of capital rather than just being good operators.
And outside of work, how do you switch off?
Well, Joe, I've got a Spanish wife and I went to Spain about 20 years ago for a few months to learn Spanish, but I ended up playing paddle. I came back to the UK, there were no paddle courts and no paddle players, but recently I'm pleased to say it's now one of the fastest growing sports, so I enjoy that very much.
Great, thank you for joining us.
Thank you.